Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. We started off Friday on a good note. It looked like we would reclaim that 25,900 mark at one point, but completely fizzled out. In fact, stocks have pulled back. In fact, the Nifty, is just about struggling to defend that 25,700 mark as well. At the current juncture, near the low point of the day, and quite a few culprits here when it comes to the laggards. The likes of Eternal, Cipla, Geo Financial. Some of these stocks are dragging the index down. Even ITC, for that matter, that stock has been in the red for much of the session. But what's holding out, of course, is Infosys. That's keeping a lid on the losses. In fact, the Nifty at least is managing to hold on to the green territory because of some of these IT names. Particularly Infosys, 5.5% gain after that guidance upgrade. So that stock is up 5.5%. Tech Mahindra, Wipro ahead of earnings. They are also upbeat. HCL Tech is also up almost 2%. So top four movers on the Nifty are from the IT pack. Aside of that, you also have PSU banks doing well. SBI among the gainers. For the week, SBI is up 4%. And I want to just talk about Federal Bank. Because after good set of numbers, there's a positive surprise in terms of net interest income growth, margin growth, as well as slippages coming down. And the street has really taken it with both hands because the stock was up, I think, 10% last time I checked. So on the back of a positive surprise in Q3, shares of Federal Bank have been doing. In fact, all the other, mid-cap PSU banks that have reported numbers have seen the stocks rally quite a bit, which is why PSU banks are among the top sectoral gainers this week. In terms of other movers, aside of IT and PSU banks, what's doing well, is I think the metal pack for the week, in fact, but the Nifty real estate pack, I wanted to mention that as well, because that index has been, bearing the brunt of the sell-off. Of course, now 2025 saw realty being the biggest underperformer, and 2026 also nothing has changed really. But today we are seeing some buying traction in real estate because some of the companies that have reported their third quarter updates were fairly strong, and we saw some bit of rally coming in the likes of Ajmera Realty yesterday, even Puravankara for that matter. So yes, realty index seeing some buying, but metals are under a bout of profit taking today. Autos, they were holding out in the initial part of the session, but they have also slipped into the red. And pharma, big drag, Cipla, so pharma is also down 1.5% or thereabouts. On a week to date basis, it's PSU banks, metals and IT. These are the top gainers. 2 to 5% gains on these indices rather. For the week. So all in all, that's how the texture is looking like. But let's bring on board a big market voice to understand, to take stock of the kind of earnings that we have seen so far, how the sentiment is shaping up in the market and what one should be doing at this juncture. Big market voice, Sunil Subramaniam joining in. Sunil, lovely chatting with you. Not sure whether we spoke this year. If we haven't, then wish you a very, very happy new year. Year started on a good note, first couple of days, but then we saw sharp cuts coming in. This week started on a good note thanks to those comments coming in from US Ambassador to India, but that was just short-lived. Sentiment in the market, according to you, do you think it will remain this way? Because FIIs are there's no coming back as of now, for at least for now. So here on kind of earnings we've seen, do you think at least there could be some leg up in sentiment, or will the sentiment remain like this at least until budget?
So I'd say that you've spoken about a lot in the last couple of minutes. So I think, first of all, we'll come to it last in terms of whether the overall index or the market, how it will do. But I think what's important to remember is the big shift in the geopolitical situation with the whole Venezuela matter and the subsequent focus around Cuba, Greenland, Iran, and the like. So what's happened is that, see, typically mid-December onwards to mid-January, FIs are generally in a holiday mood, and they generally book profits for the year-end bonuses, and they start deploying it in the month of January, but it generally starts from mid-January. So we are just about in that mid-January phase. So I think, first of all, the geopolitics plus the fact that FIs are still assessing various markets based on the valuations means that they have been very thanda, so to speak. So there is no strong buying support coming from the FIS side. Of course, the last 2 days of last week, there was heavy selling by the FIS. So that's the first undertone to look at, saying what's going to happen. I'll come to that later. But on DIS front also, right, it's the same story, that with an earnings season on the way and with the budget expected to come through. There are pluses and minuses on the budget, which I'll talk about. But with that in mind, DIAs are not clearly in a position yet to commit capital until they see which sector is giving you a good guidance. So there again, I want to differentiate between good earnings and good guidance, because we are now entering into the last quarter of the year. This is the Q3 earnings. So from a perspective of what sector or what share to buy, it's not what's happened already, but what's likely to happen. That's where guidance is probably assumes a significant position in the earnings landscape, not just for DIs, even FIs, because for them also, they're planning for 2026. So they want to buy something which will deliver value by the end of 2026 if they have a 1 year horizon, right? And then I did passing in mention the budget. And to me, the budget this time is very, very interesting budget, because what's happened is that if you see, GST collections have significantly dropped post October, November. I think November and December both were 1.7 lakh crore versus an average of 1.9, which was in the preceding 3-4 months. So clearly, the impact of the GST rationalization is showing in the revenues. Corporate direct taxes, both corporate and personal income tax, have shown a very marginal, I think 6% growth in the. Third part is from a revenue perspective, collection itself, you've had a nominal GDP growth in the mid eights. So clearly, the budget had projected a 9.9%, if I remember right, growth in nominal GDP. So clearly, the revenue numbers are not yet adding up in any significant way. So the key is what's going to happen to the fiscal deficit this year. Now, I personally feel that the government will meet the fiscal deficit target of 4.4 come what may, because foreign capital is dependent on rating agencies' rating of India, and any slippage there would be a very bad signal. So clearly, India wants to be welcoming of foreign capital, especially FDI money. So to that extent, if you're going to keep 4.4% intact with a dropping revenue, 2 or 3 things happen. One is what has already happened is a huge dividend from RBI has come and bailed out the lack of revenue collections, right? And some PSUs have also stepped up their dividend. So to some extent, capital receipts have said that had helped the government. But the other thing the government has done is that though they have done the GST cut to boost consumption, from a government revenue expenditure, they have drastically cut it. I'm talking from April to November numbers which have been published. And CapEx has been surprisingly on board with targets. So clearly the government is clear that they want to keep their CapEx, but they might cut revenue expenditure. Why I'm saying this is, then for this quarter, the government will tighten their belts because they want to meet the fiscal deficit. So government spending is going to be on the decline, and probably a lot of expenditure from this year will get postponed to next year, right? So the budget is very interesting to watch how the finance minister does this whole balance of maintaining. And then we come to the budget also is not so much about this year's report card as much as next year's outlook. So what nominal GDP are they going to forecast for next year? Is it going to be around the 8.5% level? Is it going to be 9, 9.5 or 10? Because a lot depends on that, on how much money the government will have to spend. And then the choice comes between whether you spend on public capex or do you spend with more giveaways, like the GST cut, like the income tax cut. Do you try and put more money in the hands of the public? So it's a big call, but that all depends on what nominal GDP you're going to project. Because this quarter's earnings will somewhere show you with the GST cut playing through in consumption. Other than auto, top line numbers haven't really shown that. So there's an expectation that next year it will play through. So why I'm saying the budget assumes a huge importance for all the reasons I said. So it would be, I wouldn't use the word foolish, but it is not advisable to go and commit your money capital, whether it's FII or DII, before you get this government's report card plus projects for the year out in the open. So till first week or 1st of February, when the budget comes in, I would say that nobody is really interested to go and buy. Now, in the meantime, what happens? Some sectors come through positively, some others come through positively. That gives you a clue that the rest of the companies in the sector, IT for example, a good set of forecast guidance is now pushed up all the IT, right? Similarly, a good set from a realty big player has pushed up. So, but remember, if fresh capital they're not going to commit, it's going to come through sector rotation. So if whatever goes up, something else will come down. Okay. So I would say that till February 1st budget, you are going to see a sideways plus or minus max 1% move in the market and the indices. And after that, depending on how the budget goes, the momentum can pick up immediately, or maybe another couple of weeks for the earnings season to fully play out. By mid-February, you would have a fair idea about the earnings pattern across, right? May not have it by 1st February, but 15th February. So by then you'll be clear that where do I commit my capital? And they, like I said, the FI return. So I would say that I would actually stretch my thought process and say till mid-Feb, you would still see a consolidating market. It will not correct big time with any sector which disappoints, there will be bottom buying. So there is enough liquidity in the market with DIS to support that. So that's a summary of my thought process. So like I said, earnings season, budget, this is more the time for studying the economic survey numbers to look at what it's going to look like. The good news here has been, I think the export numbers have been good for the year. Despite all this tariff jhanjat and all, decent export numbers from what I saw. Other good or bad news, I would say, is the credit growth being very good, but credit deposit ratios exceeding 80% means deposits are really not going as that fast, and
Yeah.
hence banks and NBFCs are more forced to rely on market borrowings to finance it. So if you do market borrowings, then automatically your NIMs are a little bit lesser. But if the volume growth is good enough, it can make up for that. EPS will grow. So I'm saying there's so many factors now to look and study that
Sure.
it's an interesting time to do that. But I would say it's a better time to sit on the sidelines and study all of this and wait to commit your capital.
Right. Oh God, quite a few takeaways there. But two big takeaways right now is the time to sit on the sidelines and not go aggressive hunting in the market. And secondly, by the looks of it, it looks like a strong pre-budget rally could be ruled out for now, because you said either 1% kind of move could be anticipated, but not more than that, right? Okay, let's take stock of the earnings season as well. I'll talk to you about your budget expectations as well in just a bit. But in terms of earnings season, whatever you've seen so far from the large cap IT names, what have you made so far in terms of the demand environment and of course the big AI spend that these companies are making? Of course, Infosys guidance upgrade has really cheered street, but some experts have said that HCL Tech perhaps may have done better, but it's Infosys that's hogging the limelight because of this good news of guidance upgrade. But what have you made? We've seen three large companies reporting numbers from the IT pack. What have you made? Has your view changed at all? And how would you look at it?
I don't know if you remember, I've been positive on IT for the last few times that we spoke. So for me, there's no need to change view. I continue to remain
Yeah.
constructive and positive about IT. So to me, because see, I would still say that we are going to be on a depreciating rupee this year. So that's a tailwind for IT. The second is that I've always believed that the Indian IT companies carry enough cash on their balance sheet to really make the big AI moves in terms of either investment or in terms of buying out through mergers. You've seen even mid-cap IT companies out and doing buying. So I'm reasonably confident that they will adapt and change, right? The third thing is, of course, is that the US environment. For example, if you see, US numbers are still belying it, they're coming stronger, right? So I think that the US growth, if it's good, that's very good for IT companies, right? And the fourth thing is that as a byproduct of the fact that I think that the trade deal will get done sometime. I know we still get the order Trump tweet or somebody saying something, and it doesn't look like it's going to happen soon. But if I take to me my thesis that 2026 we will see the trade deal come through. What I'm saying is that's the biggest trigger for FII flows to return. And in FII's return, IT is a very strong pick for them for two, three reasons. One is that they understand the buyers of IT. So they are able to fact check the IT guidance numbers very well with a counter check with the buyers of IT products in the US or Europe. That's number one. Number two is that IT is a natural hedge to them against rupee depreciation. Because on the one hand, rupee depreciates, their portfolio value goes down, but IT's earnings get a leg up due to rupee depreciation, so there's a hedge against that. So that's an ideal sector for them to invest in, right? So, and the third I said is that in this whole AI play, Indian IT still remains the non-AI IT play. The rest of the world IT is all only AI, and AI, right? So if you want to hedge yourself against AI,
Yeah.
Indian IT is a good play. So for this reason, I'm saying constructively that FIs are still not coming back to India. So IT will really get a leg up when that decisive move happens. The point is that I can't say when it will happen. I'm saying it will happen sometimes in a year, but it's better to buy when people are asking why rather than when people are asking why not. So I've been in the favorable IT camp for quite some time now, and I continue to hold that view that you
Sure.
keep buying
Yep.
regularly.
In terms of the demand environment, there was some commentary that was made by TCS and Infosys both in terms of discretionary spending, etc. On that front, what did you make of it?
I think it's good, and the US discretionary they spend consumption numbers are standing up quite well. Tariff hasn't proved to be a negative. It's obviously fed into inflation in the US, but user consumer sentiment hasn't got affected. It is growing well. So I think that discretionary consumption is something that is holding up in the US, and hence for IT to go and service those industries, that's good news. Second is that all those industries, even not just discretionary, even manufacturing, are going through AI related rejigs. Everybody is trying to focus on costs and reduce their labor force in the US and all of that by using AI. And I think AI consulting is the big play for IT this year and all the user industries. So very often people mistake AI to be a tech play. See, AI is a thing which is like an industrial revolution. It affects the whole spectrum. You name the industry, they want to use AI to
Yeah.
rationalize, standardize, to do that. So consulting for AI is a huge, big pot. And Indian IT companies are going to compete, and that's what they are starting to do. So to me, actually, Indian IT companies will take advantage of this AI consulting play in the user industries in the US. And I think that from that point of view, for me, the demand environment in the US, it's the one place where, that US is not slowing down. It's growing, means it's positive for IT. So I read that from the guidance that both the IT, TCS and Infosys have said.
Sure, of course, and as we speak, the rupee, in fact, I think is weakening even further around that 91 mark. But talk about other sectors as well. What are you expecting from the cement pack, so to say? Some reports I was reading, they were expecting price cuts to weigh on cement margins this quarter, despite demand being healthy. Do you see this margin pressure as temporary or more structural, and does it keep you cautious on the sector for now?
No, I think they had a blowout last quarter. So a lot of expectations have risen because of that. Cement had a very strong quarter last quarter. So clearly that can't be repeated because, like you said, cement prices have been slightly declining. And because of which I expect you will say margin pressure, but you're talking about a very high margin coming down to a slightly higher margin. So it's not margin pressure which is taking down to a low margin. There is going to be margins coming down from the previous quarter, and I think it'll last for one more quarter and then pick up because I have a strong correlation
Okay.
between the cement as well as the private capex and the housing and realty pickup, which I expect to be strong drivers in the second half of the year. So I would say cement demand and prices for cement would shoot up in the second half. So maybe there will be a reduction in margins this quarter and maybe one more quarter, but that's okay. It still be healthy margins to me.
Okay. Okay, margins will ease a bit, but they will still remain healthy, and perhaps after a couple of quarters, they will start picking up again. That's about cement. But before I let you go, what are your budget wish lists? I mean, we all talk about LTCG, STD, every budget. But from a market standpoint, what would your wish list be? And what would you like, what would your message be to FMC Taraman?
See, ultimately, I know a short-term wish list is for LTCG to be dropped or to go away, STT to be taken away. So these are the typical short-term market. As a market participant, you hope because that will give an immediate pop to the market. But I would rather say that my expectation of the budget that will give a boost to the two P's, which is private capex and private consumption. I think that's the story because government capex has been steady, 11 lakh crore. Maybe this time they'll do 12 and a half lakh crore. It's just the same thing continuing, but that's not the delta. The delta, they last year they started with the tax cut and then they followed the GST cut. So they have to boost private consumption. They have to make the Indian consumer want to spend. I'm saying a lot because they've given so much money in his hands, but still, other than buying cars, they have not going in spending. So I think the budget, if they can
Yeah.
act in a way that it triggers consumer spending, and the second aspect of it is the follow through will be private capex, which will follow consumer spending. But if the government can do like PLI, expanding the PLI, can bring in public-private partnerships in a greater way, they can do a lot of incentives for private capex. I would be the happiest because I see private consumption and private capex as the two critical the shoulders which have to lift the economy up from our current growth rates to closer to double digit. And for that, one important thing, which is not entirely a budgetary thing, but maybe directionally in the budget, it has to trick toward that we have to reinflate our economy. This low inflation, especially on food, is hurting rural economy. So I think while markets would like a lower rates for RBI rate cut to boost equities, I think that's not healthy for the economy. It's not healthy for EPS growth because nominal GDP will come down. So boosting nominal GDP back again through a bit of reinflation, and if the government can do whatever it does through the budget, RBI governor will do his part in when it comes to the policy. I think that's a critical part where I think whatever the budget does from that perspective, I would welcome it. We need to reinflate. We need to pick up private consumption. We need to keep up private capex. These are the three main things which I think the budget can support. I would be very, very happy.
All right. Okay. Point taken. Hope that happens as well. But of course, we will have many more conversations around the budget as we wait for the 1st of February. So I look forward to more interactions as well ahead of that. Sunil, thanks a lot for taking out time and joining in this afternoon.
Thank you.
All right, then that was Big Market Voice, Sunil Subramaniam, with his thoughts on a barrage of sectors and of course what he is expecting from the budget this time around. Just take a look at the market. We failed. We're just around the 25,700 mark, but near the low point of the day. Started off on a good note. We picked up traction. We were looking to reclaim that 25,900 mark, but it didn't really happen. But what we saw is a cool off, and the Nifty struggling to hold on to even 25,700 at this juncture. But of course, it's Reliance Industries numbers that are awaited post market hours, and that stock has also come off from the day's high. That's of course an index heavyweight, and Reliance coming off day's high means the Nifty also follows suit. But what's supporting the index is a 5 to 6% kind of gain on the shares of Infosys. Other tech names also quite upbeat, the likes of Tech Mahindra, Wipro. They will be reporting numbers right after market hours, and they are doing well. HCL Tech as well, following suit, 2% gain there. A lot of other movers as well. On the flip side, Asian Paints, even though there's been a crude comfort, but Asian Paints hasn't really picked up. The stock has been doing well in recent times, but still in the throes of selling. But what's doing well on the back of a dramatic drop in crude prices, 6% drop overnight. We are seeing shares of OMCs doing well, the likes of HPCL, BPCL, IOC, those are doing well at the current juncture. But just about 2 minutes to go for the markets to shut shop for the week. Let me bring on board Vishal Malkan, technical analyst, Malkan's view. Vishal, just about 2 minutes left. I wanted to understand what your BTST idea is before we talk about index and other stocks.
Hi, I think we are looking at a very strong close in certain stocks, especially Bank Nifty and banking stocks. So I definitely look at BTST idea as my stocks for tomorrow or Monday would be RBL Bank and Indian Bank. Both have broken out above their resistances and they are showing good momentum. Should be a good bet for Monday morning.
Okay, those are the banking stocks. Good bets for Monday morning. But what do you make of the move on the index? We came very close to 25,900, but that was not to be. We couldn't really clock that level. And now we are even struggling to hold on to 25,700. So whatever pop we see, it kind of ends up reversing, right? So that's what happened today. Sell on rise, that seems to be the strategy at the juncture.
I don't think so, but I would look at the other way, like Nifty is caught up in a range between 25,600 and 25,900 since last 4-5 days. So till we don't have a conclusive breakout out of this range, we should not take a call. But overall on the higher time frame chart, which is weekly and monthly, the trends are still strong. And most importantly, Bank Nifty is outperforming the Nifty chart, which is a good sign that we should look at only the north side and not on the south side. So I will go sector specifics and especially on the banking side.
Okay, of course, very bullish view coming in on banking as a pack. Both PSU banks and private banks have been doing well this week. I think they are among the top sectoral gainers. But Vishal, just 1 second, we'll just take stock of market close. 3:30 on the clock. So yes, we've shut shop around 25,700 on the Nifty. The mid-cap index gave up almost all of its gains, just marginally in the green. Breadth of the market skewed in favor of laggards. 1256 advances to 1719 declines. Of course, there's been a reversal in the market breadth as well. Bank Nifty, as we were discussing, it has cleared that 60,000 mark. Remember, we have two heavyweights, ICICI Bank and HDFC Bank, reporting numbers tomorrow. So ahead of that, we've seen good traction in shares of HDFC Bank today. That was gaining, but ICICI Bank, which has been a rank outperformer, was out of favor in today's session. So some pre-positioning happening before the numbers. Also, after market hours today, Reliance Industries will be reporting numbers. So the stock did come off its day's highs, but ended the day in the green. Yes, it was over 1% of its day's high, but nevertheless ended around 1460 or so, up 0.2% ahead of numbers. On a weekly basis, metals, IT, you have PSU banks. PSU banks, of course, were among the top gainers, and we'll talk about some of the stocks on the PSU banking side. Of course, some stocks have already been pointed out by Vishal, but we'll talk about others that were rallying today as well. Those were the top gainers for the week. But in terms of the weekly movers, ONGC, Tech Mahindra, Tata Steel, Infosys and SBI, these were the top 5 performers of the week. Of course, Infosys buoyed by the numbers, the guidance, and doing well, and SBI as well. I think this week it hit a fresh 52-week high as well. On the flip side, Cipla, L&T, Maruti, Sun Pharma, these were among the top laggards. We were discussing stocks from the banking lot, and of course, you're pretty upbeat on this sector as well. But Federal Bank in particular, post numbers, it took off and it was gaining somewhere around 10% or so. Vishal, any levels that you'll watch out for on a Federal Bank, and between Federal and Canara Bank, which one do you like?
Of course, the clear choice would be a Federal Bank because the kind of breakout it has given, and it's been continuously performing since last few months. And after this one correction which we had, which we can call it like a healthy correction from 270 to 240 in the last few days, has been recovered in just one day and is back to its new highs. So I think Federal Bank has clearly given a signal that it's ready for new moves on the upside. So I'll go with Federal Bank with a target of 290 to 300 in the next few trading sessions.
Okay, Federal Bank is of course preferred, and the stock a star performer today on the back of strong numbers. But let's shift focus to the pharma back as well. Hasn't done well this week. In fact, pharma has been in a spot of bother. Today, Cipla in particular, dropped somewhere around 3%, and for the week as well, it is emerging as the top laggard on the back of stoppage of a pausing of a key drug manufacturing in the wake of US FDA setback. But how would you look at some of these pharma names, especially Cipla, after today's crash?
I think Cipla has been in that zone for a while, and we can look at that chart. It's trading in that 1400 levels since a long time. So I would look at that as a consolidation phase and nothing much to worry about. And as it is, pharma is not the flavor of the month, as we can see that clearly the commodities, the metals and banking sector has been outperforming all other sectors by a big margin. So if I'm a momentum trader or a short-term trader, I would look at outperforming sectors, then get into pharma stocks.
Okay, outperforming sectors. Of course, metals had a bit of a down day, although this week has been extremely good for metals. What would you do? Of course, it is an outperforming sector, but would you advise taking some profits, or would you still say go out there and buy a few pharma metal names?
So as per the simple rules and basic rules of technical analysis, we always go with the trend. Of course, also we need to consider the risk reward ratio when it comes to trading. So I would look at any of those metal sectors, especially like Hind Zinc or National Aluminium or Nalco or Hindalco or VDL, to be as a buying opportunity stocks only when we get a decent dip which we have seen a bit today, but I think we can have a couple of more days where we can look at another 2 or 3% decline, where we can get going good buying opportunities on the metal stocks.
One more stock that I want to talk about is L&T. The company, the stock came under a fair bit of selling pressure on the back of news flow around Kuwait orders. But today it has won a large hydrocarbon order worth 2,500 to 5,000 crore rupees. The stock, of course, did come under selling pressure. Today, of course, it ended pretty flat. But how are your thoughts, or how are you aligned on the charts when it comes to a Larsen and Toubro? Because the stock hasn't really been able to pick up. In the middle, it did see some buying interest, but after this bit of news, it has once again fizzled out. So, any thoughts on L&T in particular?
No, I think what we saw in L&T in the last four or five trading sessions, there is a big decline, and we can see that clearly shift the short-term trend from being bullish to at least bearish, if not bearish, then at least sideways. So it will take some time to climb back that action which has done the damage in the 4 or 5 days. So I look at L&T as an avoid stock for the next few trading sessions, but before it starts moving up again.
Okay, L&T short-term trend reversal and avoid for the next few sessions. But capital market plays post numbers were clearly the flavor. This week itself, you could call it that, because after Grow reported numbers, it has seen a good 9 to 10% up move. Angel One has gained somewhere around 15% in a matter of 5 days. 361 BAM was also fairly upbeat. So, any of these names that caught your attention, and which one would your preference be?
I think Angel One would be the clear winner, because the way it has moved in the last 4 days, and especially today with the big candle with a gap up and crossing all the previous levels of resistance, as well as the momentum indicator entering into bullish zone with high volume. All technical signals show that it's a clear breakout. So I'll go with Angel One as my top pick for that sector. Of course, we can even see a short correction, maybe 1% or 2 in the next couple of trading sessions, which would be a good dip to buy.
Okay. Buy on dips and Angel One looking best poised on the charts from all of these names that I mentioned. But there are some stocks that were buzzing on the back of order wins, the likes of Zentech. It has bagged a 400 crore rupee order from the Defence Ministry, and of course Kernex Micro as well. That was buzzing on the back of a Kavach order worth 2,465 crore rupees. All these stocks, as we are heading into the budget, I mean it's around this time that we see all these stocks starting to buzz, and that's exactly what has been happening. If you look at shares of Zentech, it has gained somewhere around 7% in the last 5 days or so. Of course, taking into account today's move as well, but the stock was under pressure last month or so. It has shed 3% or so. But any of these smaller defense names and railway names ahead of budget that one should dabble into?
Yeah, I think Zentech looks good, because the way it has been moving in the last few trading sessions shows that it is ready for that what we can call as a pre-budget rally, and of course followed by a couple of news as we can see on the screen. So I can definitely the momentum can continue for next few trading sessions, and we can look at another upside of at least 7 to 9%.
Okay, that's the view. Another upside of 7 to 9%. Of course, this is the time these stocks tend to start moving up. But another stock that was in focus today, Vishal, was India Mart Intermesh. Shares clocked largest single day gain since July of 2023. There's a marquee fund, Nalanda India Fund, that has bought nearly 11 lakh shares via a block deal. It really got the shares excited. Ended higher by 7%. The stock has, in fact, given positive returns in the last 1 month as well. So, any thoughts here? It's 2265. That's where it's at, but it's still a while away from its 52-week highs. Would you say that this is, the start of a fresh up move in the stock?
Definitely, what we use in our technical language is called something called as a loud move. Loud move means very big move with big volume in a single day or couple of days, and that's what has happened with India Mart today. It gapped up from its previous price, which is yesterday, with a big gap, and then there is huge volume and a good percentage gain closing above the resistance, and also to close near the top of the day is a good sign that shows that the downtrend is over and we are looking for a fresh uptrend in this stock.
Okay, looking for a fresh uptrend there. But tell me, we're talking about all the results that are due. Almost 30% of the index reporting numbers from today to tomorrow. Reliance Industries, that's the first one. Of course, it's expected to hand in a steady report card, but the stock has come off quite a bit after hitting its highs, right? So, what's the pre-positioning like in Reliance Industries?
Looks like it had a decent correction from the top levels, which is 1600 to now almost 1450, which is almost like a 10% dip. And 10% is always a healthy correction when the overall trend of the stock is good. And we can just look at maybe 1 or 2 more days of consolidation, or maybe 1 or 2% in further. But 1400 and 2025 seems to be a very strong support for Reliance to bounce back.
1425, that support level, keep that on your radar. And what about the banking heavyweights, ICICI Bank and HDFC Bank? Although ICICI Bank has been a rank outperformer, today it was just the opposite. We saw HDFC Bank ending in the green and ICICI Bank clocking some losses. Here, how is it poised? Would you like, do you like ICICI Bank better because it has been an outperformer, or would you say that HDFC Bank is showing signs of bottoming out because it has slipped 6-7% ever since it reported its third quarter update? So here, your view?
I think ICICI Bank and HDFC Bank both have been overall a good stock category, but as far as returns are concerned, and if I'm into a momentum trading kind of a thing or a short-term trading, then I would look at more of PSU banks and the stocks like RBL Bank, Indian Bank, Canara Bank would be much better bets than the private sector banks.
Okay, so all those banks are much better than these banks. But let's talk about some of the other names. I just want to talk about the likes of HPCL, IOC and BPCL. Of course, on the back of a sharp fall in crude prices, we saw them doing well today. But of course, they've already seen quite a bit of a run up. So from a risk reward perspective, how are you looking at some of these OMCs, and how would you approach the upstream names now? MRPL saw good numbers, it reacted to it on Wednesday. ONGC, etc. were out of favor today, of course, same reason. So within the upstream and downstream, what's the preference from a risk reward perspective?
I think both HPCL and BPCL have had their share of correction in the last few days, and today both have shown a bullish candle at support levels. That means they are ready for kind of again an up move towards their previous resistance, which are almost from here, like almost 10% from here. So we can look at some kind of upside in that, as well as now when we look at the other ones which you mentioned like MRPL. So when I'm looking at the chart of MRPL, I can see that there is kind of consolidation which is going on in the last few days between 140 and 150, 155. We have been seeing a steady rise of volume in the last few trading sessions, so definitely it's just a matter of time before it closes above that 160 level, after which we can see some good momentum trading in that to look at the levels of 190 or 200 in the next few trading sessions.
Okay. Another result candidate was L&T Tech. Although the IT pack was shining, this stock down 8% in today's session, and even at a time when other IT stocks were outperforming, this wasn't doing all that well. In fact, since 23rd of December, the stock has tanked 17% almost. Fresh weakness, fresh breakdown. How are you viewing today's crash in the share prices?
I think L&T Tech, like compared to other IT stocks, especially Infosys, when it had a good up move today, in IT space, I would be more of stock specific rather than taking the whole sector as like prima facie. So I would go with stock specific chart ideas and breakouts rather than taking the whole IT sector together. So I will avoid L&T Tech for the time being, as it is consolidating in that range what you mentioned, and look for outperformers, something like Infosys, or even for that matter, we can look at HCL Tech.
Okay, that's about IT names. All right, then with that, Vishal would let you go. Thanks a lot for taking out time and joining in. Of course, have a great weekend, but lots to watch out for. Still, Reliance Industries left, ICICI, HDFC to watch out for. There'll be lots to talk about next week as well. But we'll catch up sometime soon. Thanks a lot for taking out time and joining in this afternoon.
Thank you so much, and have a great weekend.
Thank you. Well, those were some views coming in from Vishal Malkan on various charts and the stocks that were making headlines today. But one big headline that we will be getting later in the evening is Reliance Industries results. It is expected to report a steady performance and supported by a recovery in its oil to chemicals business and sustained growth in its telecom and retail segments. Now, these gains are likely to offset weakness in its oil and gas exploration and production business. Brokerages are estimating mid-single digit to low double-digit growth in revenue and operating profit from compared to a year earlier, with net profit in fact seen rising modestly amid mixed performance across business segments. Consolidated revenue for the third quarter is expected to come in at 2.5 lakh crore rupees, which will imply a growth of about 6%, compared to last year. EBITDA is seen rising 10%, while profit is expected to rise 4% on a year-on-year basis. The O2C business is expected to be a key driver of Reliance's quarterly performance this time around. Now, higher Singapore gross refining margins during the quarter and improved refinery throughput are likely to boost refining earnings, even as petchem spreads remain relatively soft. Consumer-facing businesses, of course, are expected to continue providing stability to consolidated earnings. Now, Reliance Jio's performance is likely to be supported by higher ARPU, average revenue per user, and subscriber additions as well, translating into steady growth in operating profit. Reliance Retail is also expected to maintain its gradual recovery, contributing positively to consolidated EBITDA during the quarter. But upstream oil and gas segment is expected to remain a drag on overall performance. So yes, big numbers to watch out for. The stock did come off from the day's high, but Vishal was mentioning that 1625 would be a crucial 1425, I beg your pardon, would be a crucial level to watch out for before the stock makes a turnaround. But that's not all. Tomorrow we have some big banking earnings. So as I was saying, 30% of the index will be reporting numbers, between today and tomorrow. What should we really expect from banking earnings? Now, loan growth is expected to outpace deposit growth. That's of course a matter of concern because that would impact liquidity. Margins, asset quality, these are seen stable despite deposit pressures. Loan to deposit ratio for HDFC Bank has been above comfort level, and that would perhaps be a cause of concern, but their pickup in loan growth and stable asset quality, that could be some positives to watch out for. Funding pressures, as I mentioned, there will be pressure on deposits as well, so funding pressure is likely to persist. But profit growth is expected to improve. Brokerages are expecting a profit growth of anywhere between 3 to 6% for large private banks. In fact, NII or net interest income is also expected to grow by 6 to 8%, for some of these private sector lenders. Analysts are looking out for double-digit loan growth, and in terms of commentary, what will be crucial to watch will be what the management really says about deposit mobilization. That is something that the street will be watching out for. Margins are also likely to remain stable in the third quarter. Now, brokerages are saying that the impact of recent rate cuts will only be felt more meaningfully in the next quarter. So, of course, that means that in the near term, banks may be able to defend their margins. Slippages in unsecured and microfinance loans are likely to ease as well. So, these are some of the factors to watch out for when you look out for numbers from HDFC Bank and ICICI Bank. Of course, the stocks will be reacting to the earnings on Monday. So, yes, it will be a action-packed weekend. There will be work, but yes, big numbers to watch out for when it comes to the market. But in terms of some movers today, let's take stock of some of the Nifty 500 laggards in trade today. HBL Engineering, that stock was down somewhere around 10%. In fact, right from the start of the session, this stock has been clocking in double-digit gains and ended the day, almost with a 10% cut. L&T Tech guidance cut, and of course the fact that the company will not be focusing on certain countries in terms of projects. So that is something that kind of led to this kind of a fall. In L&T Tech, you have GE Vernova, that was among the laggards, down 6%. Lemon Tree Hotels, that was also down somewhere around 5%. Engineers India, MRPL, after the good rally that we saw on Wednesday after numbers, fizzled out, down 5%. Also the fact that crude came off quite significantly overnight had an impact on upstream companies. Hitachi Energy, that was down 4.5%. Patanjali Foods, Eternal as well was down another 4%. So yes, some pressure, selling pressure on some of these platform companies as well. MMTC was also down somewhere around 4%. In terms of the top gainers, Federal Bank, we've already discussed that. That was up almost 10% on the back of good numbers. Capital market plays like Angel One were active. Zentech on the back of order win. India Mart, Intermesh, Block Deal, of course, key marquee fund buying stake. So that stock was up 8.5%. HFCL, that was up 5.5%. You also had AU Small Finance Bank, that was up somewhere around 5% or thereabouts. So all in all, an okayish week. The way we started the week, one would have thought that we would clock in strong gains for the week, but we just ended marginally higher for the week. Just about in the green for the Nifty for the week. Flattish. But in terms of sectors, as I mentioned, it was IT, PSU banks, metals. These were the sectors that gained anywhere between 2 to 5% for the week. And in terms of some of the weekly movers, top gainers include the likes of ONGC, Tech Mahindra, Tata Steel, Infosys, SBI, Hindalco, even Ultratech Cement. That stock gained somewhere around 4% for the week. On the other hand, you had Cipla, negative news flow. Today itself, the stock was down 3%. Pharma has been out of favor all of this week. Cipla was down 5%. L&T, there was some pangs in terms of orders when it comes to Kuwait. So that kind of weighed in on the stock prices. In fact, Vishal also mentioned that the short-term trend looks like it is in the negative. Autos have also not had a very good week. Maruti down 4% for the week. Sun Pharma, Geo Financial, Dr. Reddy's, Eicher Motors, and even Asian Paints, despite that 6% fall on crude prices, Asian Paints failed to really pick up today. ITC, HDFC Life, and even Interglobe Aviation, Indigo, I beg your pardon, that was down somewhere around 2.5% for the week. So all in all, we did try to make a dash at that 25,900 mark, but failed to really reclaim that level, and in fact for the day we ended almost near the low point of the day, even managing to not defend that 25,700 mark on the downside. So yes, all in all, that was the market for you, and that was closing bell for you. Lots to watch out for on Monday. We'll be taking stock of 3 big numbers. Reliance Industries, you also have ICICI Bank and HDFC Bank, among others, that will be in focus. So with that, we are completely timed out on a closing bell. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates, and we'll see you with the markets on Monday at 9 a.m. So don't forget to tune in for that. Thanks a lot for watching.